Yeah, hey friends, welcome back again to the chat. So welcome to the chat, and let me show you straight away about order blocks and everything that you need to know about order blocks. Okay, so the first thing that I have to tell you is, number one thing is, order blocks are very important. Order blocks give you a point where you're gonna be able to continue with the trade or reverse the trade. You understand me? Now let's first move on. The first number one thing that I want you to know is very simple. Okay? When I talk about order blocks, just a moment, guys. Sorry, just a moment. When I talk about order blocks and the order flow moves together. I want you to listen to this very clearly. So when I say order blocks and I talk about order flow, it means these are two things moving together. Order flow means the trend. Okay, then in that trend of order flow, it's the order block going to control you. Like, are we still continuing to move in that trend, or are we changing? Okay, so that is why you see market like moving in peak formations. Okay, peak formation and peak formation and peak formation. Now listen to the secret here, guys. You remember last time I made a video and I showed you one thing, that before starting to trade, I want you to look at your previous higher highs or previous lower lows. Then do one thing, mark them. Be like a baby here, guys. Don't ignore anything. Like, no, that one, don't ignore anything. Mark all of them. Mark all of them. Then after marking all of them, you look for your order blocks. You remember very well I told you how to draw your order blocks, like in a bullish trend or bullish order flow like this. You mark your higher highs, then you look for the last bearish candle, and make sure when you're drawing your, let me give you one sample I draw for you before you go straight to what I want to talk about. Sorry, I think I have to. This, okay, let me say if this, I'm just using an example. Let me say if this is my higher high, okay, I'm going to give you, there is something I'm going to show you what result happens. Sometimes market might not retest to that order block, and I'm going to show you the trick. I want you to know that trick. So if this is your higher high, let's draw order block. This is our bearish candle, which is our last. So the way you're going to draw the order block there is, you're going to draw it in a very simple, in such a way that you make sure you include the bottom wick of that candle and exclude the top wick. Okay. Yeah, something like that. And I've not drawn it so well. Let me extend it here. Exclude the top wick of, you can see this red candle here. I've excluded the top wick. Now I want you to see what happened here. You see possible nice rejections at this point. Possible nice rejections at this point. Now I want you to know one thing. The dealer is very wise. Order blocks are actually reversal points or continuation points. Then if you look at the next higher high, we have a difference. Like if this is our next higher high and this is our order block here. Okay, but you can see that price did not retest up to this point. Okay, of which I will show you why. Then you can see this this higher high. You can see price did not retest up to here. I hope you can understand me, guys. Then you can see our last higher high. You can see this our order block, and in this order block, price closed below this. Now, here comes the trick. Here comes the trick. Now, remember I told you one thing. When an order block is broken, think otherwise. What do I mean? Think in a different way. Because if this is your higher high, guys, we expect order blocks, when price is moving up, we expect order blocks to act as points of support point of support where price is going to gain more momentum to push price to the next higher high. Support, which is more momentum, push price to the next higher high, come and gain support, next higher high. You get the resistance, small pullback, support, next higher high. Now you can see very well that we have here our order block, because this is our higher high here, higher high, and price. If let's draw our order block, I don't want to just mark them, draw them the way we are supposed to draw them. I told you only include the bottom wick and exclude the top wick. You can make it long the way you want. That is up to you, and it is very important if you make it long so you can predict the future prices, okay? Now see this, bruh. So if you look at this is your higher high. There was a strong pullback, okay, and it broke your support. Now see this. Order block level is also support level. So this order block level is our support level. So it broke our support. What breaking our support when an order block is broken? So it therefore means the price at this point. You see, when you see an order block, that is the price, the support price. So if this support is broken, it's just like a house. You remove the pillars, it will collapse. Okay, so let's say the price has collapsed because it has closed. These candles here, these red candles here, has closed below the order block. When it closes below the order block, it's no longer an order block. We call it now a breaker. Now, when we talk of a breaker, there are two things to happen. Price can either retest to the breaker or price can retest to the source. Now, let me first begin with the breaker and I'll show you what a source is. A breaker is this, guys. Okay, the reason why price retests to the breaker, it's very easy. Take, for example, here, at this point, we have got the buyers, okay, and we have got the sellers. Now, if the dealer has collected more, what can I say, more orders in the market, and he sees very well that at this price here, the number of people who are buying the trade are too much, and the number of money, equity being bought, the number of buyers, the number of orders of buy are too much, and there is much money in it, then there is no need for him to pull price up to here. You get me? I repeat again. I want you to know one thing. Trading forex is like playing chess. You have to read the mind of your how can I say, of your opponent. If you cannot read the mind, then you're out. Let me repeat, this is our breaker. Order block has been broken. At this breaker here, there are both buyers and sellers. Now, this guy, the big boys, are not just going to move the market anyhowly. The question is, there are buyers and there are also people who are selling. The question to him is, that's why he is delaying. You see the reason why he moved the market in a ranging way? He's collecting orders, waiting for more money, waiting for more orders. Now at this point, he's asking himself, how many people are buying and how many people are selling? How much money is in the basket? If there are many people who are buying, much money, many people are buying, then there is no need for him to move up to the source. He will just retest here, then pull the price down very fast. When he pulls the price down very fast, the stop loss of all those who are buying will be hit. You understand me? Meaning they've eaten all that money. If it means that, let's say 70% of people are buying and there is 70% of money being bought, okay, and 30% of only money being sold, it therefore means that he'll pull the price down because there is more money there. They will get more money there. You get that? Then there is also this one here where Okay, let me first show you what the source is. The source is top picks. Mainly the source happens when the dealer is collecting orders. When the big boys are collecting orders, I call them big smart boys. These guys are very smart than we. Why? They see your equity, they master everything you're doing. They never use indicators that people are telling you about. They never do that. Pure price action. They're playing with your mind. Now watch this. These are picks. How many picks are touching? 1 pick, 2 pick, 3 pick. Let me mark them. We have 1 pick here. We have 2nd pick here. We have 3rd pick here. Then this pick failed to reach this point. Okay. Now, at this point, it's very easy. Very, very, very easy. I want you to see something here. The reason why these people pull the price up to here is not just because they just pulled. After the breaker happening, I told you there are both buyers and there are both sellers. It therefore means the people were already selling in this market. So what came to his mind? He was like, many people are selling than those buying, and there is more money on sale. I have to first come for these people selling, and I hit that stop loss. You see, they push up. When they push up, many stop losses are hit. He pulls again down. When he pulls down, that's the time when people are again opening orders. He takes them again to hit stop loss twice. Okay? Then after doing that, he then drops the market. He's dropping the market after he has taken off those who are in his direction. He doesn't want to move with anybody. These guys, let's say if the 100% of people who are selling and the dealer is going to sell, okay? The dealer is going to drop the market. It can even happen that only 5% will move with him. Where are the 95% who are right in his direction? Some have run out of patience because the market is moving in a ranging way. Okay. Some have got a tight stop loss. That stop loss has been hit. A lot of manipulation. So that is how it happens. That is what it happens. Now, I want you to know one thing. When you see a breaker, there are 2 things that can happen. Price can return to the source, or it just returns to that breaker and falls down. It does that under the conditions of how many people are buying and how many people are selling. Okay, this market are controlled by people who are watching your trades. That's why people are be like, it just hit my stop loss and it turned well for me. You understand that? Do you know why people say like that? Because these people are watching where you put your stop loss. They can come with a, how can I say, a rejection candle. Like now they say, let's say this rejection candle here. Maybe they just hit your stop loss at this point and they pull back and they move in your direction. You understand that? So what I always advise you guys is at least increase your stop loss. Don't make your stop loss too tight. Let's say if your stop loss is 20 pips, add 5 pips for the spread or for emergency. It's essential and it's cool if you do like that. So let's move on to what I'm talking about. So I've talked about 4 things here. I spoke about order blocks. I spoke about breaker. I spoke about source. And I spoke about order flow. I haven't spoken about order flow well, and let me speak about order flow. You see, when we talk about order flow, we mean the trend, just like this. Let's say this is an uptrend. And you know the characteristic of an uptrend, it's going to have higher highs, okay? Accompanied by of course, rejections, which act as support, pullbacks, okay? So that is like a bullish order flow. Then, you know, a bearish order flow, of course, is a falling market. Okay, you understand that? Now, I want you to understand one thing with order flow. One thing that they tell you guys is this. I want you to forget about one thing. Don't cram the market. They will tell you price will move like this. Support, resistance, support, resistance. Do you think those who are moving the market are mad? They can never be mad, because if they do this for you, they're the ones to lose money and you're the ones to make money. Yet they won't make money out of you, and you also won't make money out of the smart guys. So there is going to be manipulation in the market. The wise one, those who will apply the real skills and the real patience and will understand the way the man moves the market, those are the guys who will take the money. Now see this. See one thing that you have to know. Market is all about patience. Let's say the market is bullish, a bullish order flow. Maybe he can give you some two nice higher highs. Then the next time, he might play you. Okay, you get that. Sometimes even break these points and come up to the previous resistance, which was the previous high, before you can get a long spike to move up. So what I'm trying to tell you is, I'm trying to tell you that expect anything in the market. Expect anything in the market. You have to do that, because if you're always expecting, you just say that anything can happen in the market. Even when you're buying, anything can happen. It can even sell at any time. So when you're in the market, know one thing: anything can happen in the market. Anything. That's why before you open your trade, before you trigger that sell, make sure you put your stop loss. You can trigger a sell, a buy like this, and there is manipulation starts, and you start losing money like that because of saying that I'll first enter the sell, then I modify to put the stop loss. It's risky. Anything can happen in the market, good or bad for you. That is business. Okay, risk and reward. That's why they say risk and reward ratio. Sometimes you risk. Sometimes when you're entering your trade, when you're triggering your sell or buy, you're already risking your money. You might make the money or you might lose the money, but it's not gambling like that. It's knowing what you're doing. When you know what you're doing, you'll keep in the industry every day. Every day, even with 100 EST, you will keep on in the industry every day trading, and you will enjoy trading. You will enjoy trading. Now, let me give you another good example that I want you to know. I want you to know something very important. You see this higher high here, which was our last higher high here. Then you see this point here. It was just, this is now not our high, it's just a peak. Another peak. But you can see that these peaks are slightly, okay, sorry. Let me use something professional. I draw from here and I say this. You see this. So what am I trying to say? I'm trying to say that you can see like this, it's like a falling peak. Falling. Eh? You can see that it's like falling. Just a moment. Because this high, this peak, is not the same price as this peak, and it's not the same price as, okay, it can be, it's not, the reason why I'm not there is the same price is because candles have closed here. And you can see here the price at which the candle has closed here is different. Let me mark so you can see very well before I can explain to you something. Let me use, I use this. Let's mark the first peak where the candle closed. Candle closed about that price, 0.71592. If you see the second peak where the candle closed, it's here, 0.7145. You can see the price, the candles were closing in a small price, reducing slowly. Then you can see this, it completely fell to this point, 0.71212. Okay, though it went up to here, so a bit little. Now at this point, you have to apply what we call round numbers. When you see a ranging market, if you want to trade a ranging market, okay, let me give you this secret. If you want to trade a ranging market very well, the time frame that you should use is H1 or H4. Ranging market, you sell at this point, you buy at this point. The reason why they call them, okay, I didn't want to speak about round numbers, but the reason why they call them round numbers is because something, when they say that you're rounding something to the nearest, it therefore means that you're making it so easy to the point that you can easily find an entry with a small pip, like maybe 3 pips stop loss, 4 pips stop loss, but of course we can't put 4 pips stop loss. you have to add on what we call the broker's T. I call them the broker's T. That is the spread. Okay. So at this point, this is where I will mark all my round numbers. And I will wait for the break of resistance. And next time I'm gonna make the video about resistance, supports. You know, people are confusing things. How you can use support and resistance. They're actually very powerful. Yeah, they're very powerful things. Okay, support and resistance, very very powerful. Now I want you to know here that you see the price here, price at which this candles closed are different. Okay, it therefore means that there is rejection in the market. If let's say I'm going to the market to buy something, this was my first price. When I went like today, let's say I went like this week, these guys accepted a price like maybe I'm gonna sell to them rice. I'm gonna sell to them at a stock of rice. These guys accepted. Of course, everyone here eats rice. I think most people here know what I'm meaning by rice. Okay. These guys accepted the price, maybe let's say $10. These guys accepted the price of $10. Okay. Then the next time I came, all of them deny, and I had to close the business here. $10. Then we closed the business, and we closed the business. Yes. Next time I came back in the next week here, and price kind of fell to $8. And because bargaining power was too much, I had to just close the price. You can see that price is kind of falling from 10 to 8. And then the next time, okay, the next time I came, the bargaining power was so high. Like I started my price from high. Let's say I started my price from the previous $8, but there was no market for my goods until I had to sell at a low cost of 6 USD, and I closed the business. Now, it therefore means this market has been falling, okay? But two things can happen in this market. Sometimes it can act as a bullish flag, just trying to buy time, a continuation of a trend, or a change of a trend. Now, I want you to know the reason. It's very, very powerful. A bullish flag can be like, let's say we are moving up. Then you see something falling like that, okay? Then from nowhere, he shoots up to another high. But of course, this has to be like, okay, I've not drawn. Okay, I'll look for an example here. I don't like drawing. I'm not good in art. I just have to look for another example that I can explain to you this, guys. I don't know if you've understood what I'm talking about price here. Now, one thing, where a candle closes at that point is like the price has been accepted. When you see a rejection candle like this, it means, for me, I always say that, okay, these guys started their price from very high, but the bargaining power was too much, and they had to just accept the business by closing the price at a low price. You get that? So what am I trying to mean, you guys? I'm trying to mean that if you see a high like that, then a high dropping, another high dropping, it means that why is it that this peak here is not breaking this peak? It means this is just acting almost like a resistance. Then this is also acting like a resistance to this price, to this peak. Because why is that this peak cannot close the price at this point? And why is that this peak cannot close the price at this point? It means these are also resistance points for these peaks. I don't know if someone can understand there. It means these are also resistance points for these peaks. Today, I've mainly spoken about bullish stuff, some small parts, and it's kind of late here, guys. I always make videos very late because I'm busy during the day trying to trade. Not trying to trade, actually, sorry, trading, of course, yeah. Then in the evening, I'm trying to make some videos for you guys so you can learn something. So, guys, I'm really very tired. So let me close by saying this. Pay so much attention to the trend, which is the order flow. If you're seeing that you're not the higher highs you're drawing, or it's not clear, don't force the market. Leave it. Don't force the market. Master how to draw the blocks very well. master every higher high, master everything, master breakers, master how these guys are manipulating the market, and the money will come for you. Guys, I'll see you in the next video. Don't forget to do one thing. If you need more of my extra videos, go and check on the description. There is my website there. Click on the link, then you can go through it. If you need a course, if you need more of my content, if you need extra help, click on that last link on the description. Open it, go through it. Don't forget to leave a like to the video so YouTube can promote. Don't forget to leave a comment about what you think about this video. Don't forget to also leave a comment about which video do you want me to make about, That is how I can really know your weakness. If your weakness maybe is in support resistance, then you can leave a comment that maybe I don't understand this, and I can see how I can come in and make a video about it, and we share and we keep on learning. And I told you guys that I was thinking of how I can be going live maybe during London or New York session, so we can trade this together. And if you're not in the Telegram group, don't forget to check also the link. Click on that link, join our free Telegram group. Let's trade together and let's learn together. And don't forget, guys, that this video is being sponsored by Xness. Click on that link if you don't have a trading account. When you click on the link, open yourself a trading account and start trading with me free of charge. Let's share the knowledge together. And also, guys, if you see that you have something you want to share to the audience, I know, like, we all have knowledge, okay? You all have knowledge. Maybe there is something that you really feel that you want to share to the audience, to this guy, to our fellow friends following this channel. What you can do is you can WhatsApp me or you can email me. We can have a trade recap, like we share the same analysis together. Zoom, like maybe you can show me like a discussion, then we can post it on YouTube. It's free and it's just of goodwill, of course, just like the one I'm doing, guys. So what you have to do is, let me wish you all the best, and shout out all the Nigerians. I really love you guys so much, because they're the top guys who are watching my videos. Kenyans and a bit of Indians. I have so many guys. UK, though they're very small people, but thanks for the support, guys. And let me hope you're all learning, because our goal here is to be consistent in trading forex, and we really enjoy the business, and we trade the business with comfort, and we sustain our life trading the business. Guys, I don't want to talk too much. Let me just wish you the best of your luck. Come next week, we are killing the market. We are making extra pips. We are making money next week. So, guys, don't forget to find yourself an accountant. Keep trading, okay? Don't underestimate your capital. If it's $10, start with it. I always told guys, if you have $10, only open one trade. Leave it run until it hits your TP or it hits your loss or stop loss. It's not a problem. I'll see you next time, guys. Bye.